Hey everyone, Supermicrocomputer just reported quarterly financial results that demonstrated the AI investing trend is for real. The company reported revenue growth more than doubled year over year from 2 billion up over 5 billion. So I'm going to dig into the latest quarterly financial report in more detail. I'll also update my buy recommendation for Supermicrocomputer stock. I'll do it all in this brief video, so let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so like I highlighted, net sales jumped to 5.31 billion. This was up from 2.18 billion in the same quarter the prior year. Now that was up from 3.85 billion just in the most recent quarter. So revenue growth is absolutely exploding for Supermicrocomputer. However, the rest of the financial performance were not as great. What do I mean by that? Well, the gross profit margin came in at 11.2%. This was down from 17% in the same quarter last year and 15.5% in the previous quarter. Supermicrocomputer's management has repeatedly said they're focused on gaining market share and they're willing to offer lower prices in order to gain in order to get their foothold into these companies, and then they'll focus on profitability a little bit later. So that's what I mean by the net sales is doing really well, but some other metrics are not doing so well, as well as cash flow, which I'll talk about a little bit more later in the video. Net income did grow nicely up to 353 million. This was up from 194 million in the same quarter the prior year and up from 402 million from the previous quarter. That said, cash flow from operations was negative again, 635 million, and this is several consecutive quarters now where Supermicrocomputer's cash flow from operations are negative. Now, I've done videos explaining why this is the case and why it's okay for companies that are growing as rapidly as Supermicrocomputer is growing for their cash flow from operations to turn negative. Still, this negative cash flow from operations, and it's a significant number, 635 million, weighs down on the company's financial performance and makes it more challenging to grow because you've got to get that cash from somewhere. Where is Supermicrocomputer going to get that cash from? Is it going to be through borrowing or is it going to be through selling some more stock? The company already sold shares of stock. Now the company has taken on some convertible debt. And so those are going to weigh on the company's performance. If they sell more stock, that's going to lower the earnings per share because it's going to dilute shareholders. If they borrow money, of course, they have to pay interest expense, and that's going to lower earnings per share. So this negative cash flow from operations will have consequences for Supermicrocomputer, and that will bring down profitability. But at the same time, it's boosting sales because it's offering favorable terms to customers. So there's a bit of a two-sided solution here for Supermicrocomputer. Of course, the thing that will get the most headlines is the company announced a stock split, a 10-for-1 forward stock split, and they expect trading on a split adjusted basis on October 1st. Now, I'll have an entire video devoted to the company's stock split because I know you will have a lot of questions about the stock split. So I'll do a whole video dedicated to the stock split. In this one, I'll just kind of point it out. They did announce a 10-for-1 stock split. Management saying that Supermicrocomputer continues to experience record demand of new AI infrastructures, propelling 2024 revenue up 110% year over year to 14.9 billion. And as we'll see a little bit later, the company is forecasting continued strong revenue growth in its next fiscal year. Management saying that the investments in Malaysia and Silicon Valley expansions will further strengthen our supply chain, security, and economies of scale necessary for the growing AI revolution. So Supermicrocomputer feels this is a sustainable growth opportunity, not just a one-off event. And given all the data we're getting from all of the other AI companies, this seems like a reasonable assumption to make for Supermicrocomputer. Looking at the full year results, net sales came in at 14.9 billion, and that was up from 7 billion in the same quarter last year. So sales more than doubled year over year, and management is forecasting sales to almost double again in their next fiscal year. For the next quarter, management is forecasting sales of 6.5 billion with earnings per share of between $5.97 and $7.66. But more importantly, the annual outlook for fiscal year 2025 sees the company bringing in 28 billion in revenue in the next fiscal year, which will be up from 14.9 billion in 2024, which was up from 7 billion in 2023. So from 2023, where they had sales of 7 billion, they're expecting to roughly 4x to 28 billion in 2025. So a 4x revenue growth for Supermicrocomputer in 2 years. And that's why I said at the beginning of the video, Supermicrocomputer is demonstrating that the AI investing trend is for real. These are tangible sales and profits. These are actual results. This isn't just hype. This isn't just discussing or optimism or enthusiasm. These are actual sales and profits coming out of these increases in effectiveness of artificial intelligence. All that being said, Supermicrocomputer is experiencing some growing pains. It's not easy to grow your company by 100% year over year for 2 straight years, especially if you're a primarily hardware company, right? This would have been much easier for a company like Netflix, because if Netflix's sales grows by 100% year over year, that wouldn't be much trouble for the company to handle. It's just more people watching the content they've already created. But for a company like Supermicrocomputer that actually has to deliver inventory, actually has to deliver products to customers, with the growing amount of sales, that's a growing amount of product it has to deliver to customers, dealing with the supply chain, getting that inventory, securing the inventory, delivering the inventory. All of that becomes incredibly challenging when you're a hardware business growing revenue 100%. And so that's leading to, for one, the accounts receivable is rising, and it's rising faster than sales. You notice here accounts receivable jumped to 2.668 billion in the June quarter ended June 30th, and that was up from 1.1 billion in the same quarter last year. So sales doubled, but the accounts receivable increased by more than what sales increased. And that's evidence of a management strategy I discussed earlier, where they're focused on gaining market share, and they're okay with offering favorable terms to their customers so they can secure the sale. Okay. Also, inventories more than doubled to 4.4 billion, up from 1.445 billion. And so when inventories increase, the company is paying cash for the inventory, so that's cash leaving the company, inventory coming in. What's more, when Supermicrocomputer actually delivers that inventory to customers, they're not going to get paid right away. They're going to get these accounts receivable, and they're not going to get the money for maybe 30, 60, 90 days, depending on the terms of their arrangements. So you can see here a real cash crunch for Supermicrocomputer, because of the mismatch between when the company pays for the product and when the company receives money for installing or delivering the products to their customers. Still, they've raised some cash. They have $1.7 billion in cash because of stock sales and convertible notes. So they're okay, but it's just the direction is not encouraging. All right, so Supermicrocomputer is now trading at a forward price to earnings of 15.26, which is a more reasonable valuation compared to where it was trading at earlier in the year. Remember, earlier in the year, I had rated Supermicrocomputer stock as a buy around the second week of January, and then I had told investors to take profits around March when the stock price was elevated, and I suggested that the stock price had increased too quickly, and I downgraded it and I rated it as a hold. So I've had Supermicrocomputer rated as a hold for several months now, And these reports coming out of Supermicro were very encouraging, especially the forecast for next fiscal year and the revenue growth expected. So I'm upgrading Supermicro stock here. I'm upgrading it to a borderline buy, and I'm updating that recommendation here today on August 6th. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.